A new low-cost CPF investment scheme to help Singaporeans willing to take on more risk for potentially higher returns is slated for a 2028 launch. Prime Minister Lawrence Wong says the government will help shape and develop such investment products. At the same time, more support for lower-income families, including additional payouts of $500 per quarter for those making progress towards social mobility. Chloe Teo reports.
As Singapore reaches its super-aged status, Prime Minister Lawrence Wong has assured more support for seniors to age with dignity, security and peace of mind. To that end, some $400 million will be set aside to fund additional subsidies under the recently enhanced CareShield Life, a national insurance scheme providing support for long-term disabilities.
With longer lifespans, retirement adequacy is another major concern for many Singaporeans. Our aim is clear. Singaporeans who work and contribute to CPF consistently should be able to meet their basic retirement needs with confidence.
Support in this area will also be strengthened with a CPF top-up of up to $1,500 for those aged 50 and above. CPF contribution rates for elderly workers will also increase in 2027. Seniors aged above 55 to 60 will top up 1 percentage point more, with a 0.5 percentage point increase from employers. For those aged above 60 to 65, both employers and employees will each contribute an extra 0.5 percentage point. Half of the employer contributions will be offset by the government. PM Wong also noted that some CPF members, like those with longer runways to retirement, are prepared for more risk in exchange for greater returns. The CPF advisory panel earlier recommended an investment scheme that would allow younger investors to have more exposure to higher risk assets that offer the potential for higher returns. But as they grow older and approach retirement, the investments will gradually shift into lower risk assets to protect their savings.
We studied this recommendation carefully. Currently, such life cycle investment products are available in the market, but they have traditionally come with high fees. So rather than leave this entirely to the market, the government will help shape and develop such products under a new scheme for CPF members.
The Manpower Ministry says a new voluntary scheme is being worked out, aimed at those preferring a passive long-term approach or having less financial expertise. Fees will be kept to minimize costs, and 2 to 3 reputable providers are expected the first half of 2027 before launching in 2028.
The government will also be prepared, in principle, to provide some time-limited support to kickstart the scheme. Participation in the new investment scheme will be voluntary.
Besides seniors, lower-income families will also receive a greater boost in their journey to social mobility, with enhanced payouts for those in the Comlink Plus program. This includes an additional $500 per quarter for those actively progressing.
With these enhancements, a family with 2 children under Comlink Plus can receive around $10,000 per year in cash and CPF top-ups while their children are in preschool. And we hope this will provide them with the necessary support to stabilize their finances and secure a better life for themselves and their children.
PM Wong also highlighted support for persons with disabilities as a key national priority, with the government ready to set aside additional resources for this effort.
Bishan Toa Payoh MP Saktiandi Supat says CPF account holders must be educated on the risks, downsides and volatility that comes with investing funds. He was referring to a new CPF investment scheme that offers simplified, low-cost and diversified life cycle products to those with less expertise.
It essentially adds on another layer to retirement adequacy and also gives options. It's optional, but it probably gives options to those who want to take on slightly higher risk. But I think one of the some concerns is the fact of education, whether we need to educate our CPF account holders, those who want to take it up, and what are the risks.